Welcome back, folks. In this video, I want to teach you how I approach the market from a weekly perspective. Okay, now we're going to look at an example on the NASDAQ. And as I said in my previous video, 90% of my trades are based on a single pattern from ICT known as a market maker model. In my last video, I demonstrated a market maker sell model on gold. If you haven't watched that, make sure you pull out some time and watch that video and then go back and do your own study. In this video, I'm going to show you an example of a market maker buy model and put it in context of how I approach the market from a weekly perspective. Okay, so looking at the NASDAQ, we're clearly bullish. Okay, the indices have been bullish for quite some time. So I'm only really looking for longs. Okay, I may scalp a short here and there, but predominantly I'm looking for opportunities to long this market. Okay, now I look at the news calendar, all right, every opening of the week, and I've gone back to the previous week. And we can see there are two important news releases. So on Tuesday, 1st of July, okay, we have a 10 a.m. news announcement. And on Wednesday, we have a 8:15 news announcement. Okay, now I'm not too concerned about NFP, right? ICT teaches that if you know what you're looking for, if you can determine bias, then that is a day where we know volatility will be injected and there are good opportunities. But it's also an environment with elevated risk. So you need to understand how to read price action to be able to take advantage of those news events. Okay, now I'm going to highlight a couple of things. So on this chart, Monday is the start of the week. Okay, so that there is Monday. Okay, then we have Tuesday and then we have Wednesday. Now what I want you to notice is a couple of things. Firstly, we have a daily fair value gap. Okay, that's important because a daily fair value gap is discount, right? Now I'm going to highlight that, and then we're going to talk more about how we can take advantage of news events and discount pricing. Okay, so I'm going to just change the color of this. So I should have this already set. Okay, great. Now I'm going to drop down to an hourly time frame. Now this is important, okay, because what I actually wait for is Wednesday, and there's a reason why I wait for Wednesday. Okay, so what I have understood is that Monday and Tuesday form the weekly range, and that's why I like to wait for Wednesday. Okay, and what I want to be doing is, if I want to be a buyer in this market, I want to be buying at discount. Now discount is low of the day, low of the week. Okay, so I will mark Monday's high as the high of the week and Tuesday's low as the low of the week. So Monday and Tuesday form your weekly range. It's very important because you got to think about this. If you're trading within the week, Monday, Tuesday, Wednesday, Thursday, Friday, then where's the low of the week? It can be the previous weekly low, but you often won't get that. Okay, so we can't always wait for previous weekly lows. So within the current week, we need to define where is the current weekly range, and Monday and Tuesday defines that, and Wednesday is the middle of the week. Okay, and that's where I like to look for my opportunities, whether it's at the high of the week, which is the high end of the price range between Monday and Tuesday, or the low of the week, which is the low end of the price range between Monday and Tuesday. Okay, so we can see Tuesday they bring the market down, leaving a high on Monday. Okay, as a high of the week. Now I want you to notice, and I've said this previously, look at how they've brought the market down and they've left equal highs there. So I will mark that on my charts. Okay, you see how clean those equal highs are? When equal highs have been left, then you need to take note of that. If the market is going to reprice lower, then it should take liquidity prior to the drop. And so this should have taken that high and then dropped lower. Right? However, when the market manipulates, you'll find it often leaves highs intact because what it wants to do is entice and induce short traders into the market by leaving equal high, where retail think that that is resistance. And as the market is dropping, especially when the market takes out a swing low on its way down, okay, retail, what they do is they adjust their stops to be at these equal highs, basically a double top. Okay, retail believe double tops will hold as resistance, and that's where they place their stops on short positions. So there's a lot of liquidity resting above those equal highs, buy stops that the market needs to fuel any move up. Okay, so I'm going to drop down to a shorter time frame, and what I want to reinforce is that we mark out these levels. Okay, so we mark out the high of the week, which is going to be Monday. Okay, the low of the week, which is going to be Tuesday's low. Okay, Monday's high is the high of the week, Tuesday's low is the low of the week, and anywhere where we can see equal highs. Okay, and also look at how Wednesday opens. So Wednesday opens up here. Okay, we use midnight opening price. Now you can see on that open, Wednesday also drops, but we have very, very clean equal highs there. So I will mark that as well. That's a daily high. Daily highs, daily lows, weekly highs, weekly lows are going to be important liquidity pools. Okay. So the market opens, consolidates, and immediately drops to below Tuesday's low, which is the low of the week. That's important, right? Because that's discount, right? Low of the week. And not only that, but that is the daily bullish fair value gap, as I've explained previously when we were looking at the daily charts. Deep discount. Now, let's move into a 5-minute time frame and investigate the market maker by model. Okay. So you can see my NASDAQ trades on my YouTube channel. I mostly post them in my as shorts. Okay. Now, let's have a look at this. So this is very clean consolidation, right? That's the original consolidation. Okay. Very clean equal highs there at the open. That's above midnight open. Okay. This is midnight open right here. Now you can certainly short that down to, that's the midnight open. So anything above is where we would want to enter short positions if we have a setup to short. So we can short this down to the low of the week. Okay. We also have equal lows formed here. Okay. But I want to talk about the market maker buy model, right? I'm not really looking to short this because I see this original consolidation and the overall weekly profile is in a buy program where we have a bullish market. So I'm looking for an opportunity to long this market. And my preference is to long it at the low of the day or low of the week or from that daily bullish fair value gap. Okay. So what do we see here? I want to teach you how you can identify when the trend is changing. Okay. Now look at this movement down. I want you to notice how we are forming and respecting bearish signatures, right? Bearish fair value gaps, bearish order blocks, all the way down. Okay. So here we have movement down, up, down, fair value gap, down, bearish order block, down, respecting bearish order block. Okay. Movement down. This is a complete downtrend. Okay. Now, there's news on this day, right? On this particular day, there is news. Now, let me show you the calendar to remind you. So on Wednesday, the news is at 8:15. Okay. So let's look at the price action at 8:15. Now, remember that we have a couple of reference points already on our chart. We already have on our chart where is the low of Tuesday, which is the low of the week. And this blue shaded area is a daily bullish fair value gap. Okay. So let's mark out the 8:15 candle. That's the news candle, right? Look at the market. The market's moving up prior to the news. This here is the 8:15 news candle. That's the 8:15 news candle. Notice that the market is manipulating, moving up. Okay. So if I'm looking to take a long, I'm not interested in taking a long anywhere around that level because I know there's a weekly low and a daily fair value gap that I'm waiting for. Okay. Also notice that at this point, we have not violated any bearish signature throughout this entire move down, right? Even on the news announcement, we are simply coming up into this bearish fair value gap. Okay. One can in fact look to enter a short position if they felt that there was enough range, okay, in that movement down to the potential target, which would be the low of the week or the daily bullish fair value gap. Okay. So news opens up on this candle. We have the manipulation prior to the news, okay, where the market's moving up, but it's coming up into bearish signatures on this current move down, which is all bearish. We continue to go lower, okay, and we come into and tap the low of the week, which is low of Tuesday, and the daily bullish fair value gap. And look at the time, new hour, 9 a.m. Okay. Now I want you to look at the price action here. We now have after that point of interest, the market has created its first bullish ICT signature. Nowhere on this down move did we see a bullish ICT signature form, right? All throughout this down move, it's all bearish ICT signatures and they've all been respected. Okay, this here is the first bullish ICT signature after coming into key points of interest. Low of Tuesday, which is low of the week, okay? And we've gone through there, and the daily bullish fair value gap, okay? So all of that's important. You've got to know your levels and know where you want to take an entry from, which is basically a point of interest, and at the right time. This is the brand new hour, 9 a.m. Okay, so at this point, there is a bullish ICT signature, and we tap into that bullish fair value gap. And from that point onwards, the buy program is now in play. Okay, the market has switched sides. This is the left-hand side of the curve. This is the right-hand side of the curve. You can see how quickly we reprice higher, and our first target would be these equal highs, that original consolidation, and runner up to the high of the week, which is Monday's high. Okay, and you can see there's our level, Monday's high. There's also equal highs there. Okay, now on this particular day, we don't reach up to there, but the next day we go through there. Okay, so I would and did close positions at this equal high, and then I just had a runner for close of day. Okay, I don't hold the NASDAQ overnight. Okay, so you got to go back and you got to study this chart, understand the weekly profile. Okay, Monday, Tuesday, sets the weekly range, and if we're bullish, we want to buy from low of day or low of week. And we want to align that with any other bullish ICT signatures if they are available. So Tuesday, Monday is half the week. Tuesday, low of the week. Wednesday takes out the low of the week and comes into daily bullish fair value gap. And that is not the only thing. We need to have a reason. And that reason is not that we're just bullish from a profile perspective, but we have liquidity pools and a model, a framework. The market maker buy model is in play when we see, number one, equal highs left at the high of the week and we're moving down. Okay. Number two, on the day itself, the market is showing its hand. Original consolidation. Okay. A drop, which is manipulation. Okay, into low of the week and daily bullish fair value gap. And then we want to see bullish ICT signatures form from that point of interest at the right time. New hour. As soon as we tap into that new hour, the buy program is initiated from this first bullish ICT signature, at which point we can look to frame a short position once we enter into and tap into that bullish fair value gap at the right time. And our protective stop will simply be at the low of the current day. Targeting minimum would be the original consolidation and or the high of the week, but I don't like to hold positions overnight on the NASDAQ. So for me, the runner that I had on was a close at the close of the day, right? A hold to close. Okay, but the majority of my position came off here at the original consolidation from that market maker buy model. Okay, so I hope it all makes sense. You've got to go back and you've got to study these charts. Okay, you've got to learn, you've got to practice it. Okay, only then will you understand how to read these charts, how to read price action to be able to then forecast future price movement by looking at current price action and historical price action and by identifying the weekly profile that you are in, such as what I've discussed in this video, and monitor how the market moves around Monday and Tuesday's weekly range. Okay, hope the video is useful. I will now talk with you in a future video.